Unit 11. 11. Listening. Asking for information about bills of exchange.
Trade Finance, can I help you?
Hello, I'm calling from Kappa Trading. We've just had a large export order, our first in fact, and we are planning to use a bill of exchange or a bank draft. Unfortunately, I'm not at all clear about some of the conditions.
Well, perhaps I can clarify them for you. That's what I'm here for.
Okay, your instructions talk about the drawer, the drawee, and the payee. But aren't the drawer and the payee the same thing?
No, the drawer is the party that issues a bill of exchange, and the payee is the party to whom the bill is payable.
Sorry, I don't quite follow you. Surely the bill is payable to us, as we're the seller.
Well, that depends whether you use a bank draft or a trade draft. A bank draft is payable to the bank unless you use a trade draft issued by you.
Could you go over that again, please?
If you use a bank draft, the buyer pays us, and then we pay the money to you, less any charges due to us. If you, the exporter, issue the bill, it's referred to as a trade draft, and it's payable to you.
Oh, I see. And if you issue the bill, it's generally payable 30, 60 or 90 days from the bill of lading date. Is that right?
Yes.
What exactly does that mean?
The bill of lading is a document that the ship's master signs, acknowledging that the goods have been received for shipment, describing them, and giving details of where they are going. But of course you can always get the bill endorsed.
Sorry, did you say endorsed?
Yes, you can endorse it to the bank.
Could you explain that in more detail?
Yes, we can endorse the bill before it matures. That means we guarantee to pay the bill if the buyer doesn't. Then you can sell it at a discount in the financial markets.
I don't quite see what you mean.
It means you can get most of the money immediately, and you don't have to wait for the buyer to pay the bill. For example, you sell the bill at 99%, and the discount represents the interest the buyer could have received on their money until the bill's maturity date.
Oh, right. Okay, thank you very much.
My pleasure. Goodbye.
Unit 12. 12. Listening. Concluding a meeting.
I'm sorry, John, but I'm afraid we'll have to bring this point to a close. I think we've covered everything, and it seems that we all agree on the way ahead, so I'd like to go over the decisions we've taken. We're going ahead with the plan to redesign and refurbish some of our branches and to relocate the others. John is going to look into the question of finding more suitable premises for the branches in List B, possibly in shopping centres, and contact property agencies. Julie will contact the company that designed our most recent branches and also investigate their main competitors in the refurbishment business. Remember, we need a company that specialises in banks because of the security aspects, and preferably one that can arrange to do the building work out of hours, in the evenings and at weekends, so that normal trading can continue. Alan, you're going to see if any more market research data is available about customer expectations. Claire, you're responsible for getting more information about what facilities the back office staff in the branches in List A would like from a major modernisation or upgrading. Is that all clear?
Yeah.
Does everyone agree with that?
Yeah. Yes.
Good. Kirsten, you'll let us have a copy of the minutes by when? Wednesday?
Yes, that's fine.
Good, thank you. Can we fix a date for our next meeting? I expect we need about 3 weeks. Can we say Monday the 22nd at 9?
Yeah.
Okay.
Yeah.
Well, thank you, everybody. It's been a very productive morning, and I look forward to our next meeting.
Thank you.
Unit 13. 13. Listening. Freely floating exchange rates.
I think a lot of people would say that there's been an important trend towards more flexibility in exchange rates. So, for example, the pound now floats freely in terms of other currencies. The central bank doesn't intervene, only very, very rarely. And that's true for an increasing number of countries. The market system is now doing, say in the case of sterling, what central banks and finance ministries used to do in the past, which is trying to pick and stick to an appropriate level for the currency. But there are problems with the markets. Markets are not perfect. One problem is that nobody knows the future. And if there is an unexpected piece of news about a country, say you discover a vast amount of oil, or the government suddenly falls and is likely to be replaced by one which has a very different financial, tax or monetary policy, then everybody will suddenly wake up and say, hey, this is a country whose currency we must buy lots of, or this is now really unsafe, we must get out. And the swings in exchange rates can be absolutely enormous. You can see a currency go up or down by 1, 2, 3% maybe in a day in response to certain news. A lot of the people who are operating in foreign exchange markets don't tend to think so much about the long run and what the currency really ought to be worth in order for its goods to be priced at the right level in foreign markets and so on. They're trying to guess very short-term trends, and they're trying to guess the hunches of other traders. They tend to say, oh, let's see, if something is going up today, it will probably go up tomorrow. They just go in one direction, and you often get huge exchange rate swings, going on for maybe even years, certainly for weeks and months, which are pushing the currency away from what it really ought to be. This is a source of worry, and it's undoubtedly happening. And it's due to the fact that people don't have perfect information, and often tend to say, well, if he's doing this, then he must know something I don't. I'd better copy him. And that can be a recipe for real trouble.
Unit 15. 15. Listening. Market report.
In Tokyo today, the Nikkei 225 was firmer at 8,569.33. Stocks around Europe also advanced this morning, following Friday's late surge on Wall Street, when the Dow Jones gained 80 points. In Paris, the CAC 40 is up 20 points, although France Telecom plunged €3.50 to $13.55 after the company issued a profit warning, and Thomson dropped 1% to 18.34. The DAX in Frankfurt is also up by 36 points, although Lufthansa tumbled 4% to 7.15. In London, the FTSE 100 has climbed to 4,220.1. British Energy jumped to £5.12 after they published their 6-monthly results. Notable losers in London, however, include Vodafone, which slumped to £1.16. On the commodity markets, copper, which seemed to be going through the roof last week, is steady at 79.7 cents a pound. Gold has slipped to $362 an ounce, while silver is almost unchanged at 4.44.
Unit 16. 16.1. Listening 1. Catering choices.
So, any surprises?
No, not really. Well, yes, actually, the response rate. It was extremely high. We sent the questionnaire to about 50% of the staff and got nearly 3,200 responses. That's around 80%.
That's very good. So, what do they want?
Food, and lots of it. There's a clear demand for both a staff restaurant serving hot and cold lunches and for coffee and sandwich shops. Most respondents already working in departments with restaurants say they only eat out once a week, on average. But they also say they wouldn't choose the same lunch option every day. They clearly expect a building with 8,000 people working in it to provide them with several choices.
Well, that's okay, isn't it? That's more or less what we're already planning.
Yes, but there's also a significant demand for breakfast as well, both cooked breakfast and coffee and pastries. Though, on the other hand, around 30% said they were likely to bring in their own lunch most days and would like fridges and microwaves near their offices.
That's fine. It still leaves over 5,000 people to feed. And breakfast is no problem once you have the staff and the facilities. At the moment, we're thinking of an 850-seat restaurant, serving around 2,500 meals daily, about 3/4 at lunchtime. In fact, it'll be one of the largest restaurants of its kind in the country, in the world even.
16.2. Listening 2. Health and leisure needs.
Okay. What was next?
Well, after they've eaten, they seem to want to sweat it off. Over 90% are in favor of a gym, especially the female respondents. They want rooms for a range of exercise classes, aerobics and yoga and things, as well as full gym equipment like weights and running machines. Less than 20% asked for squash or badminton courts, so I'm not sure we need to plan those, but wait for it. About 50 people said they would like a swimming pool.
A swimming pool? Where do they think we're going to put that?
On the roof.
Oh dear, I think we're going to have to disappoint 50 people. Now, tell me about medical and healthcare.
Well, I was a bit surprised, but hardly anyone expects a diagnostic doctor service or dental treatment. Most people said they prefer to have only one doctor and to get treatment near where they live. There were also concerns over patient confidentiality.
Yes, that doesn't surprise me. Most people don't want their employer to have access to their medical records. I guess we'll simply abandon that idea.
Yet over 65% were in favor of a health clinic for things like travel advice and inoculations. And 8% want cycle parking and changing facilities. This is higher than we expected.
These people who cycle in Manhattan, they amaze me. But we'll clearly have to do something about that. 8% of 8,000 is a lot. Anything else?
Well, 200 people want their own space in an underground parking lot, even though we specifically said this isn't an option.
I can understand that. I'd like one too. But, like you say, we can't even think about that.
And about 100 people, I know that's not a lot, want a convenience store where they could get things like newspapers and magazines, candy, cans of soda, and emergency purchases like tissues and headache tablets. I guess 8,000 customers is enough for a store like that. They have them in hotels with much fewer people.
True, but we're not building a hotel. Our people will be working and not shopping most of the day. Anything else?
Yes. The "do you have any other concerns" question showed that there are a number of things the staff are worried about. Understandably, a lot of respondents voiced fears about a terrorist attack and want a lot of information about evacuation arrangements and fire precautions. I think we'll have to send everybody a special booklet about this, explaining what the architects are doing.
Yes, that's a good idea.
And a lot of people seem to be worried about the time it will take to move around within the building. Most of them have never worked in a 40-story high-rise, and certainly not in one with so many people working in it. This building is going to take some getting used to.
Unit 17. 17. Listening. The role of banks.
Well, the role of the investment banks. Yes, they're certainly big, important players in mergers and acquisitions, and yes, they may sometimes try and drum up business, but I think that no well-run firm will want to engage in this kind of activity unless they see merit in doing so. So it isn't all driven by the banks. What we do note, and that is really interesting, is that when a company goes for a takeover, tries to take over another, the thing that's most important is its share price, the share price of the company doing the takeover. So if the share prices do well, which they did in the 80s and 90s most of the time, companies feel richer. Their shares are more valuable, so they tend to go out on a buying spree, and they will get advice from big investment banks and merchant banks about when to buy and what to buy. And the potential victim of a takeover bid will obviously want to get advice from another national institution about how to defend itself, assuming that's what it wants to do. So we've seen a lot of acquisitions and mergers, some friendly mergers and some contested takeovers, a lot of them happening in a strong stock market. In the early 21st century, so far, we have been seeing share prices slide a bit, and so mergers and acquisitions are becoming less frequent and, of course, less valuable. The value of companies has fallen, so the value of the activity for the merchant banks, investment banks, has been slipping too. It's very much a cyclical phenomenon. Boom for shares means more takeovers. Slump for shares means less.
Unit 18. 18.1. Listening 1. Conditional offers.
OK, I'm going to be direct about this. We need your offices to use as conference rooms for meetings with customers. I'm sorry to say this, but they're much too nice for an IT department. So we're asking you to relocate to some offices we rented across the street. Of course, this is only temporary, as we're all moving to the new building in a year's time.
And why can't you use the offices across the street as meeting rooms?
Because they're a bit small. And dark. 2 of them don't actually have any windows.
You must be joking. We couldn't agree to that. Why would we go there?
No, wait a second. We would consider a temporary move on condition that we get much larger offices in the new building.
I'm afraid much larger is out of the question. But we'd be happy to discuss the size of your offices in the new building as long as we can have your current offices before the end of the month.
I'm afraid we can't accept that. Discussing the size will not be enough. I say much larger because, as you know, we are understaffed. We would agree to move temporarily provided that we got the go-ahead to hire the software designer and the systems analyst we need, who would obviously require offices.
Well, we could offer you 2 extra offices so long as no other department objects. But, as you know, I can't make staffing decisions.
I'm sorry, but we wouldn't consider moving now unless you can guarantee us both the staff and the space we need.
Well, I'd be willing to take your request to the next board meeting if you agreed to move out on the 26th. What would you say to that?
I'm afraid that still doesn't meet our requirements.
18.2. Listening 2. Should we grant this loan?
So, Chris, the situation is this. Kappa Trading has the exclusive rights to manufacture Moggles toys to go with a new children's cartoon series on the television. I don't know if you've heard of it.
No.
Well, it goes out every day early in the evening, and the kids seem to love it. And the toys based on the series, they're little plastic figures, are selling really well. But Kappa can only produce 20,000 a week. They don't want to take on extra staff and run 2 shifts in the factory because they don't know how long these toys will go on selling. So they want to subcontract to a company in China, and they want to start immediately. They have a company lined up, but they're going to have to pay them 60 days after the first shipment, and they don't have a big enough cash flow.
OK, so how much cash do they currently have?
Well, none. But that's because they're too successful. They've spent all their money on raw materials, and they're making these toys and they're selling as fast as they can supply them, but the wholesalers haven't paid them yet, and they need to import more.
Have they got firm orders for the toys they want to import from China?
Yes, for 100,000 toys, but they're sure they'll soon get more orders when the first ones sell out. They want to import 500,000.
Yeah, and what happens if suddenly the series isn't popular anymore, or all the kids have got the toys and your company, what are they called?
Kappa Trading.
And Kappa Trading has to pay for up to 500,000 toys they can't sell that they've bought with our money.
They don't think that's going to happen.
Of course they don't, but it could, couldn't it? Look, bring them in, let's have a meeting tomorrow afternoon.
Unit 19. 19. Listening. Derivatives.
Derivatives are a very mysterious phenomenon. They're not entirely new, but there has been an enormous growth in them recently. And what they are is funny kinds of financial trick, which change the structure of risks and returns. Often they promise higher return on average, but at the cost of big increase in risk. That's their usual property. OK, so who buys them and why are they undertaken? Sometimes people undertake financial derivative transactions actually to make themselves safer, to hedge. They've got a bill, let's say, coming up, which has to be paid in US dollars. Well, the sensible thing to do is try and hold some US dollar assets ahead so that if, when the day comes when you have to pay this US dollar bill, the dollar hasn't in the meantime gone up very sharply, which could spell real trouble for you. So hedging is actually an important source of demand for derivatives, and companies can, in appropriate circumstances, make their financial position much stronger and much safer by undertaking these activities. But these derivatives are complicated. They certainly may not be fully understood even by the banks, which are rather keen on doing trades in them.
You have to adopt a balanced view of derivatives because they've had a very bad press. There have been some very well-cited examples of misuse of derivatives, and these have caused problems in the market. Potentially, they could have caused a lot of dislocation in various markets. But I think we need to recognise that derivatives have been around for a very long time, in various formats, and that used properly, they can be a very helpful financial management tool. Derivatives can ensure that some of the unpredictability that occurs in the financial market is hedged or neutralised, at least to some degree. However, if derivatives are misused, they have the capacity to cause a great deal of damage. Generally speaking, derivatives are used to protect certain positions, although they can also give you exposure to areas that the bank decides that it wants to have exposure to. With regard to speculation, I think it depends on the degree of speculation. Financial institutions are in the risk and reward business. To get the reward, they have to take a risk. So derivatives are another tool you can use to take risks, to expose yourself to risk in certain areas where you decide to do that.